Hi, friends. Welcome back to Money Matters Business Finance 101. If we haven't met yet, I am Randy Turkin. I'm the founder of I Need a Clone Consulting. We specialize in monthly bookkeeping and CFO level advisory for scaling service-based businesses. What we really do is help business owners build a healthier relationship with their numbers so they can grow without unnecessary stress. Every month on Instagram and Facebook, we share a lot of free finance education and inspirational content. But the problem is that the algorithm gives those posts about a 24-hour lifespan. And after that, they basically disappear. So this year, I decided to pull the most important topics each month and bring them here into one deeper conversation where we can slow down and actually think about what we're sharing here. So I still recommend following us over there. Instagram is at Clone Consulting and Facebook is I Need a Clone Consulting. But here on YouTube is where we're going to go deeper. And if you're someone who likes the blend of strategy and soul, I also send out a weekly newsletter called The Manifesting Strategist, which blends metaphysical insight with practical business strategy so that conscious entrepreneurs can align their vision and build purpose-driven businesses. That newsletter is essentially the written version of this video. So if it's easier for you to read, I would highly suggest going over there. It's ineedaclone.com/blog, and you can subscribe to that. So this is our second Money Matters class of the year. And I have to give you a quick disclaimer. This is for educational purposes only. This is not individualized tax or financial advice. Please always consult your CPA or your financial professional before making financial decisions. Today, we're going to talk about what growth actually looks like, the difference between revenue, profit, and owner's pay, why profit matters more than revenue, and how clarity in your numbers changes how you make decisions. Before we do that, I'd like to pull a business by design card. These are cards created by one of my business coaches, James Wedmore. And I love giving these classes sort of a frame for us to view what you're about to learn through maybe a higher perspective or a different lens. So I'm going to go ahead and pull a card. This is what the box looks like, business by design. The Get Ready to Rise CEO. Okay. All right. This is the card I pulled. And it says, if you don't think you deserve it, the universe won't ever serve it. You are way too smart to be the only thing standing in your way. So that is a beautiful frame for this class today. And with that, let's begin today's class, which I have lovingly titled Revenue Isn't Enough, Financial Clarity Before You Scale in 2026. I think one of the biggest myths in the online business world is that growth means bigger, busier, louder. But growth doesn't always look like more. Sometimes growth looks like better systems, clearer numbers, less stress around money. Sometimes growth is knowing exactly what's working, what's not, and making decisions from data instead of adrenaline. I have worked with business owners in the $75,000 to $300,000 range who are doing well on paper, but they don't actually feel stable. They're busy, they're launching, revenue is coming in, but there's still that quiet undercurrent of, am I okay? And that's not a growth problem, that's a clarity problem. So if you're ready for growth that feels intentional instead of overwhelming, then this is the work. And if at any point you realize you want support around this, you can always book a call. We work with business owners at different stages, depending on what kind of clarity they need. Now, let's talk about something that sounds basic, but is not. Revenue, profit, and owner pay are not the same thing, and confusing them is expensive. Revenue is the money that your business brings in. Profit is what's left over after expenses, and owner pay is what you actually take home. A lot of business owners assume that those numbers move together, but they don't. You can have $20,000 months and still feel strapped for cash. You can show profit on paper and not be paying yourself consistently. You can raise your revenue and accidentally raise your stress level. I have seen businesses doing 250K a year with razor thin margins because expenses grew faster than revenue. Contractors, software, marketing, subscriptions, all of that adds up. And when you don't understand how these three numbers interact, you make decisions blindly. You might raise prices when the real issue is cost control. You might hire when your margins can't sustain it. You might invest in growth before the foundation is solid. Understanding these three numbers is the difference between momentum and pressure. And if you're unsure how they work together in your business, that's not a failure. It's just a signal that it's time to look at your reports more intentionally. Okay, and so the number that I love seeing on my clients' financial reports each month, it's not revenue, it's profit. Profit tells me that the business is actually working. It tells me expenses are under control. Pricing supports the business. There's room to pay the owner. There's room to plan ahead. There's room to breathe. Revenue tells me that you're busy. Profit tells me you're sustainable. When I see healthy profit, I know my client can make decisions with confidence instead of guessing. They can hire thoughtfully. They can invest strategically. They can take a vacation without panicking about payroll. That's when business starts to feel lighter. And if you're not sure what your reports are really telling you, that doesn't mean you're bad at business. It just means that no one has ever walked you through them properly. So let's talk about pricing. Your pricing should do three things: cover your expenses, pay you consistently, and leave room for profit. If you are busy, but still feeling financially stretched, your pricing may not be aligned with your goals. I see this all the time in the 75,000 to 300,000 range. You raise revenue, you add client, you increase workload, but your take home doesn't move much. That's usually not a motivation problem, it's a math problem. When you look at your numbers, ask, are my monthly expenses fully covered? Am I paying myself consistently, not just when there's extra? And after all of that, is there real profit left? If the answer to any of those is unclear, then pricing needs a deeper look. So here's an example. If your monthly expenses are $18,000 and you want to pay yourself $8,000 consistently, your revenue goal isn't just $26,000. It has to be higher because profit and taxes still need space. That's the kind of math most business owners don't sit down and calculate. They just aim for a revenue number and hope it works out. And your financial reports can tell you quickly whether your pricing supports the business you're trying to build or whether it's quietly undercutting you. And if you've never reviewed pricing alongside your actual numbers and not just your projections, that's often where we start with our clients. So let's talk about your profit and loss report. Your P&L is not just a tax document. It's a behavior mirror. It shows you where your money is going and whether your expenses are slowly rising faster than your revenue. One of the simplest things you can do is run a profit and loss comparison report. Look at this month versus last month, or this quarter versus last quarter, or this year versus last year. Pay attention to both the dollar changes and the percentage changes, because here's what happens. Software subscriptions stack. You sign up for one tool at $29 a month, then another at $79, then a marketing platform at $199. And suddenly you're spending thousands annually on tools you barely use. Or Contractor costs slowly increase, and you don't notice until your margin shrinks. A 5-minute monthly review can prevent a $5,000 annual leak. Your P&L is one of the simplest control tools you have. And when you review it consistently, you make adjustments early instead of reacting late. Now, here's the real question. Can you actually trust your profit and loss statement? Because everything I just talked about only works if the data is accurate. So here are the first red flags I look for. If I see negative expense accounts, that's a flag. If I see large uncategorized or ask my accountant balances, that's a flag. If owner's draws are showing up as expenses, that's a flag. They don't belong on the P&L, they're on the balance sheet. If payroll looks wildly inconsistent month to month without explanation, that's a flag. If income or expenses are duplicated, that's also a flag. These aren't small technical details, they distort reality. And when reality is distorted, decision-making becomes distorted. So the easiest way to avoid these red flags is not just automation. I'd be remiss if I didn't touch on this. With the rise of AI bookkeeping tools, there's this belief that you can completely automate your books and step away. Wrong. AI can miss context. A $200 expense could be misclassified as an asset instead of an expense. AI can lack common sense. If vendor behavior changes even slightly, the categorization can be wrong. And most importantly, it can't explain the why. AI can show you a trend, but it can't tell you that your margin dropped because you ran a one-time promotion or hired a temporary contractor. AI is a tool. It is not oversight. And oversight is what protects your margin, your profit margin. This is why human review matters. This is why monthly bookkeeping isn't just about compliance. It's about having someone who understands your business, watches the patterns, and flags issues before they become problems. That's the difference between reactive bookkeeping and strategic bookkeeping. So let's get practical for a minute. If you want to trust your numbers on your P&L, you have to reconcile the right accounts. That includes your business checking and savings accounts, business credit cards, payment processors like Stripe, PayPal, or Square, loan and line of credit accounts, payroll clearing accounts. Reconciling sounds fancy, but it simply means matching your accounting records to your actual bank and processor statements. It sounds basic, but this is where accuracy lives. This is our final check for our clients each month to make sure that we have captured everything correctly. When these accounts are reconciled monthly, your financial reports become reliable. When they're not, your P&L is a guess. If you're making $150,000 or $250,000 a year and your Stripe account hasn't been reconciled in months, that's not small, that's risk. This is why monthly bookkeeping matters, not for compliance, for confidence. And if scaling is on your 2026 vision board, the time to track your numbers is now. Clarity does not begin the year you want to grow. It begins before you scale. At my firm, we help business owners build better systems, get clear on their financials, and stay aligned with their goals. But the numbers I'm about to walk through, you can start tracking these today, because scaling without tracking is gambling. So these are the metrics that matter. Revenue trends. Look at monthly and quarterly patterns, not just total sales. If revenue spikes every March but drops in summer, you can plan ahead. That's strategy, not survival. You want to look at the profit margin. This is how much you actually keep. Two businesses can both make $10,000 a month, and one keeps $7,000, one keeps $2,000. Only one of them can scale comfortably. Which one do you think it is? That difference determines how much room you actually have to grow. Number 3, client acquisition cost. If you spend $200 to acquire a $1,000 client and that client stays with you, then growth feels sustainable. But if you spend $400 to acquire a $600 one-time sale, then growth feels exhausting. Tracking this changes how you market your business. Number 4, cash flow. Cash flow is when money actually moves. You can be profitable and still stressed if clients pay late, if subscriptions renew before invoices are paid, or if you haven't set aside money for your self-employment taxes. Healthy cash flow gives you breathing room. And breathing room is what scaling actually requires. Number 5, operating expenses. As you grow, tools and contractors are going to accumulate. Reviewing these regularly protects your margin. And lastly, we have average transaction value. Sometimes growth doesn't require more clients. Sometimes it requires deeper value per client. That is more elegant scaling. So you don't need to track 50 different numbers. You need to track your revenue trends, your profit margin, your cash flow, your operating expenses, your client acquisition cost, and your average transaction value. Those 6 alone will tell you more about your business than guessing ever will. Next up, true or false? You only need to think about taxes once a year. Blatantly false, my friends. For business owners, taxes accumulate throughout the year. They don't magically appear in April. They build quietly. And if you ignore them, they build loudly. So checking in regularly helps you avoid penalties. It helps you prepare for estimated payments. It helps you make smarter decisions before the year ends. Tax planning is not panic season, it's rhythm. And if taxes feel overwhelming, the answer is not to avoid them, it's to give them consistent attention. And when you start giving your numbers that kind of steady attention, you begin to make decisions differently, more intentionally, more confidently, less reactively. And that brings us to something important, because your numbers need attention now, not in April. If you are behind, you are not alone. But here are a few reminders to keep you steady and on track. Gather your documents now and confirm your deadlines. Don't ignore your bookkeepers or tax professionals' question. And remember, there is still time to catch up if you start now. Again, this is not about panic, it's about rhythm and leadership with your money. And if your numbers feel overwhelming or you're not sure where to start, then reach out. We will help you get clarity. I want to share, as we close up, some free resources that are available to you that you may not be aware of. These are real tools you can use right now to save time, money, and unnecessary stress. So, to start, if you need help understanding your tax obligations, start with the IRS Small Business and Self-Employed Tax Center at irs.gov/businesses. It has forms and filing guidance and educational tools specifically for business owners. Next, if you are looking for broader support, like planning, funding information, or growth tools, the Small Business Administration at sba.gov is an excellent resource. Third, for more hands-on support, check out your local Small Business Development Center. They offer free one-on-one advising and training, including financial management guidance. SCORE at score.org is another strong option. It connects you with volunteer mentors and offers workshops and tools to help you think strategically. And lastly, the U.S. Chamber of Commerce also publishes free guides and templates that you can use throughout the year. So you don't have to navigate business finances alone. There are real resources available, and combining those with clean financial data gives you an incredible advantage. So whether you decide to use these resources on your own or whether you decide you want more structured support, the goal is the same, clarity. Because when your numbers are clear, your decisions change. And when your decisions change, your growth changes. And if you're at the point where you don't just want information, you want consistent oversight and support, that's where we come in. At I Need a Clone Consulting, we support business owners in three primary ways. First, we offer monthly bookkeeping. This is the foundation. Clean, reconciled, trustworthy numbers delivered consistently so you can actually use your financial reports to make decisions. For clients who want deeper financial oversight, we offer CFO-level advisory. That's strategic planning, forecasting, margin analysis, but only built on numbers we trust. Meaning, if you're going to be a CFO-level client for us, then we are doing your books also. And then for early stage entrepreneurs who want to understand their numbers and build systems themselves, Financial Foundations for DIY CEOs is designed to teach you how. I'm offering this one-on-one right now, and I hope to set up a group offer soon. This is basically where I will teach you how to go in and do your monthly bookkeeping exactly as we do it for our clients. And then I will also teach you how to read the reports like you're a CFO. So, in summary, today's class taught us that you don't need to track 50 different numbers, just the right ones. I gave you 6 of those. You don't need to understand every tax code. You don't need to do this perfectly, but you do need clarity, because clarity changes how you lead. It changes how you price. It changes how you hire. It changes how you scale. Revenue isn't enough. Financial clarity is what actually makes growth sustainable. And whether you build that clarity on your own or with support, build it. Clarity first, then momentum, then scale. And as a reminder, if you don't think you deserve it, the universe won't ever serve it. You are way too smart to be the only thing standing in your way. Don't forget it. I'll see you next month for another Money Matters session. Bye.